Citizens of the world, welcome back to another Keep Yours podcast where we try and keep a few more dollars in your wallet. Today we continue with our COVID-19 series. This is our 420, April 20th special. We got good news and we got bad news. So as usual, I like to start with the bad news so that we can end on a good note. And of course, most of us know what the bad news is. The PPP program immediately ran out of money this week. No big surprise. In fact, I think that they actually knew this was going to happen. It's not like the Treasury is not full of smart people who understand that they have access to all the data. So they know exactly how many people are on small business payroll. They know who's going to be eligible for the plan as they wrote it up. And immediately that means they know where money is going to go. Now, if the system was truly egalitarian, where everybody who got in line literally, was the same, then it might have been a fair process. But here's what I really think happened. I really think that they knew about it, and they knew about it because they quickly asked for more money for it. And it was 2 days into the rollout, and they said, well, we're probably going to have to go back to Congress for more money. Well, that means they knew that before they rolled it out. And they also understood the system that they were putting it into, which is the SBA system, which is not designed for what's about to happen or what did happen. And instead of calling this the toilet paper of finance in an ode to the canceling of Burning Man, we're going to call it the Burning Man of finance. And so I got a little slideshow here, and I'll walk through it for everyone who's just listening on audio. But it starts with the road to the SBA is limited. But it's usually fairly empty. And this is actually a picture of Highway 34 in Nevada that leads into Burning Man. And this is the road in and out. It is a one-lane each-way road. And normally it is very, very empty. And then, all of a sudden, just like when Burning Man happens, there's unprecedented demand. Yesterday the road was empty. Today the road is so full it's unbelievable. And that's exactly what happened in this PPP program. And so what happens? Everybody's looking for a VIP lane in. And the VIP lane was either you are a very good customer of your big bank and or your big bank does business with the SBA. And pretty much you needed your bank to do a lot of business with the SBA, as we found out with Chase and Citibank, who I don't even know how they could be that incompetent to be that big a bank and not do that much SBA business. I just assume that's not a big part of their initial business. But it seemed like Bank of America, you might as well put this VIP lane was owned by Bank of America for a good while. At least that's how it felt. And then it was only the other people, the other banks who had previously done business with the SBA that really got in. What I heard from community banks and fintech companies that hadn't previously done business with the SBA is, while the law said that they could become registered agents to do business with the SBA, the process to do that took longer than the whole program was open for. So a lot of people who are served by community banks or served by fintech services because they can't get loans with traditional banks got hosed in this program. And instead of it being like, okay, everyone gets in line at the road at the same time, instead, what do we got? We got, here comes our VIP lane. And then who gets in it? Oh, if you have a prior SBA loan, you get in it. And you get to get up here where it merges into the single lane instead of waiting through, what would you call this? 15 lanes across of everybody waiting? Oh, no. Let's get in I had a prior loan with the SBA, I get in this VIP lane. And then if you had prior bank loans with your bank, they're the only ones that are talking to you, which sort of makes sense. Banks are going to take care of their best customers first. That makes sense. And all the small business owners that really need help, they're stuck over here. So that's here's the winners. The winners got into Burning Man, and they're all sitting there. And tomorrow or today, here comes the fire. We burn down Burning Man, and that's the ashes of the PPP program. But maybe actually not, because it sounds like they've gone back and Congress will approve additional funds. And of course, this makes sense because, it wasn't really a fair process. I think that they knew this was going to happen, and they knew they would go back to Congress. And of course, they can't not put more money in this, because it's the people that it was most designed for that needed the most help are the people that didn't get loans. So hopefully they throw another 300 or 400 billion at this thing, and everybody who needed a loan ends up getting one. I think that'll actually happen. Now, if you're with Wells Fargo or Chase or Citibank, but especially Wells Fargo. I mean, Wells Fargo's, first of all, they're in trouble, and the reason that they could only do 10 billion in loans to begin with is because they've historically cheated. They've opened up accounts for people when they didn't even ask for them. They had all sorts of unscrupulous activity going on, which ended up them being limited in the amount of loans that they could borrow. And they specifically sent out notices to their customers to say, hey, sorry, we can't help you. And not only are we not going to provide a conduit to help you, as in, hey, please apply into our system and we're going to move it to another bank or sell our loans off and help you get your loans. No, they said, go apply somewhere else. Now, how are you supposed to get new banking relationship while the economy's shut down? A few banks actually have their doors open. Many don't even have the branches open. You can walk up to a window that's basically as good as you can get. So you're supposed to go develop a new relationship with a banker where they're going to help you through this process when, first of all, they're going to have a difficult enough time just opening up an account for you right now? That's crazy. So if you're one of those people who used to be with, or who is with Wells Fargo, you might consider a new bank. I would say the same for your Chase and Citibank customers who they couldn't help you. And if they don't end up helping you in this, why wouldn't you leave your bank? Go find a bank that actually cares about you as a customer. Because make no mistake, just if you have a depository account with them, i.e. a savings or checking account for your business, that is a valuable asset that banks need, because that gives them the money to make loans to everyone else. And they basically come back and told all their smaller customers, and I get it on the customer end, right? It makes sense. It's the same way I would run my business. We sell cylinders to people, and if all of the country called at the same time and everybody said they needed the product, then we would have to decide who gets it. So from a banking perspective, if I'm running the bank, of course I'm going to go take care of my longest customers, my oldest customers, the ones that have helped me the most and been loyal customers to me. I'm going to go help them first. 100% that makes sense. But I'm still going to make a good faith effort to try and help all of my customers across the board to show them all that I care. Or at least let them know what the system is up front. Wells Fargo should have sent out a notice immediately telling everyone they had a limitation of 10 billion and they should go apply elsewhere, instead of pretending they were going to have a portal up for people so they could close it a day later. This is just not doing good business. So if you were with them, they're one of your customers, you were one of their customers, I would leave. I would go find myself a community bank or a credit union. But also, now that we know the rules and this could happen in the future, you definitely want them to have a conduit to the SBA. And a lot of the problem is the SBA system is super archaic. And a lot of the people are reporting you have to do manual entry for these loans. You know, the volume of loans is still crazy. I talked about it last week. But one of the companies in Colorado that does a lot of small business loans with the SBA and kind of plays conduit for the banks, especially the smaller banks, they put out a video, we'll say, and that's what it is, on the PPP program, and they talked about their loan program. And they said over the course of all of last year, they did like 150 loans or less. And now all of a sudden the SBA goes from doing, 10,000 loans a year to doing 550,000 loans in 2 weeks. So obviously, the people who were already in the SBA system are the easiest ones to get in there. So you got that express lane treatment if you've previously had a loan with the SBA. I was one of those people to be that lucky. I had a loan with the SBA that I paid off a couple of years ago. So they already had all of my info. So it's an update versus somebody new coming in. And I feel like all the new people got put on hold. And it's very unfortunate, but I'm hoping Congress is going to do the right thing. So hopefully more PP money coming soon. So that's a good news, bad news situation. Now, how about actual better news? For everyone seeking unemployment, especially self-employed people seeking unemployment, Colorado, in Colorado style, they're ready on 420. And if you don't know why 420 is significant, ask your children. I'm not going to explain it right now. It's just kind of an inside joke on medical marijuana and marijuana in general in 420. So this was from the Colorado Department of Labor site that I picked up yesterday. They begin taking applications on April 20th. So this is very good. That means that unemployed people will be able to take advantage of that $600 a week unemployment benefits at a minimum plus whatever eligibility. And they also actually explain what you need. So self-employed and gig workers, you will need to provide your tax returns. And my assumption is your unemployment will be based off of what you paid Social Security and Medicare tax on, which is usually net self-employment income. So that will determine what your Colorado benefit will be, and then they'll tack on the $600 a week for federal benefits as well. Even though the federal government's paying for all of this, I think that's the way they're going to calculate it. It seems to be the only way that makes sense. So that is actually good news. I did check a couple of other states. More and more states are coming online. Last week, Illinois and New York were paying out before they had the system set up with the federal government. Now I think more systems are getting set up. It does seem like more unemployment sites are willing to take claims. However, they're also going to be inundated, and because of this now more inundated. So if you're having trouble getting through, you might try in the middle of the night. And that doesn't necessarily mean for the phone calls, but definitely for submitting your application. Definitely easier to get on a lot of these websites in the middle of the night than it is to do it during the middle of the day when everybody else is trying. They're going to experience high volume, and again, their staff is not what they would like it to be. They have the same problem. The unemployment offices have this. You might as well say this is the unemployment road. It's the same. So what worked for Burning Man for the analogy for the PPP program also works on unemployment. It's the same thing. The unemployment usually is a two-lane road. They're used to processing so many applications per week, and now all of a sudden it's Burning Man style and everybody wants to get in. And the good thing about the unemployment is eventually everyone will get in. It's not limited. Realistically, it's not limited in terms of the number of people that are going to get benefits. So that's a good thing. That's going to help us all. So what else do we want to talk about this week? Student loan payments, all deferred for government-backed loans until September. That's a very good thing. So what does that mean? That means that basically no one has to pay on a federally backed loan. Now there are private loans. The government can't control private loans because they're not in charge. So if you have private loans, you got to go to your loan provider and ask if you need to get extensions on payments. But everybody else who has a government-backed loan, it's automatic. All loans until September are deferred. So is the interest on it. So if you still have your job and you can still make payments, now is a very good time to do so because all of those payments go to principal, no interest expense. So that could help some people pay down their debt. For other people, it's going to help them with an extension if they're no longer working or have reduced income. Another thing I want to talk about this week is, can I break my lease? And the answer is not exactly. This is a very good New York Times article. I will synthesize that down for everyone here quickly, which is basically you're personally obligated. So whether it's so if you have a business lease or a residential lease, regardless, if you sign personally, then you are responsible for the payments for the entire lease period. Now, what usually happens if somebody walks out? Let's say you just lost your job and you're going to move in with somebody else to reduce your rent immediately. And you go tell your landlord, I can't pay my rent, I'm moving out. Now, legally, the landlord's required to get somebody else in there to try and collect rent from. However, proving that is tantamount to proving you're looking for a job while you're on unemployment. It's kind of hard to do and gets into some specifics that are, you rarely ever win that argument. However, most of the time, it ends up settled because it's not worth going through a full court proceeding for the amount of money. If you owe $2,000 a month in rent and you skip out on 6 months of it, that's $12,000. $12,000 in legal fees can be incurred in a matter of days. So usually these things don't go full on to court, but a lot of times they'll send it to try and get collections, and most of the time collections are negotiated for less. So the question is, how much less? And obviously this is unprecedented times, so nobody really knows. Now, one thing I do want to mention in that is that if you have a lot of debt right now and you're unemployed, this could be the right time for you to go seek bankruptcy protection and get rid of all of your debts. Not student loan debt, not IRS debt, but all of the debts that you can't get rid of in bankruptcy. If that's the case and you walk away from a lease, that lease can be included in the bankruptcy as long as you're not living there afterwards. On the commercial side, if you break your lease, it's kind of the same thing. You're personally liable. So do you have the assets that they're going to come after you? So if you've got a house and you have $500,000 of equity and you owe $100,000 to this landlord, they're probably going to come after you. That sucks. However, again, it will probably be settled at a court for less. The other option is to go back to your landlord right now and renegotiate your leases. This is happening all over the place. And a lot of the mortgages backing these, there's a lot of forgiveness or flexibility within that, where maybe not the loans forgiven by the bank, but maybe interest-only portion is collected. And maybe you can go negotiate with your landlord to say, hey, if you guys can get a few months of loans pushed, then maybe I can make a partial payment that's interest and the expense part of the actual loan versus the principal part. And we can defer principal part and maybe we extend the lease. You try and figure it out with your landlord. If you think your business is done and you're really going to break it, again, bankruptcy could be an option for you if you're really worried about them coming collecting, and it depends what your asset values are at that point. So that's an important thing to consider going forward. Breaking of leases can get ugly. I expect there to be a lot of leniency from judges in bankruptcies going forward, and even in claims for trying to collect. And collections, you're not going to be considered the nice guy if you try and go collect on people who got laid off. At the same time, if you haven't seen that Dirty Money one on the Kushner Enterprises, where that's specifically what they try and target is lawyers and any missed payments of rent, it's very possible that they could come after people. And I would not put it past a lot of these very shady landlords. There's a lot of slumlords who will try and come get every penny from you. So, point being, be careful. If you do walk away and you get permission, make sure you get that in writing and make sure you keep that. You might need that later. A lot of times what happens is the apartment complex may not come after you directly for the rent, but internally they'll write it off, but they may sell that debt to a third-party collector who then has a claim and tries to come get it from you as well. And we saw a lot of this in 2010, 2011, and it forced a lot of other people into bankruptcy. So just be conscious of this, be aware of it, and if your lease is up in, let's say, 3 or 4 months, and you're currently on the extended extra unemployment and you can afford to pay your rent and then move out, I'd recommend doing that so you just don't have the fight. So you just want to consider the fights that you're going to take on and the situation that you're in. And try and do the best for you and your family. At the end of the day, that's what's most important, and you just want to know your legal remedies. In addition to the PPP program, there's the EIDL program, which is straight up loans, and there's also other state resources and grants. So just stay on that PPP. I think we're going to see this week that they allocate more money. There's a lot of pressure to do so, and I think that there's other resources, but they seem to be pretty thin. I expect state and local governments to start feeling the pain of this relatively quickly. There's going to be a whole lot less money collected in taxes. Obviously, if we're not all out spending money, the sales tax revenue is going to drop. If this results in lower property prices, then taxes from property is going to go down, and you're going to see state budgets get really hammered, and there's going to be a lot more debt in the system at the state and local level that we're already seeing at the federal level. And states often have to balance their budgets, so that pain will be felt quickly, and states will start laying off people and stop spending money on other programs. So just know that there are some other resources out there for small business owners. Mostly for individuals, your best bet's still going to be unemployment. And the last thing that I want to talk about today in detail is the IMF came out this weekend in the most honest report that I've seen to date, and they're saying that just a recession is an optimistic forecast. And this is from the BBC News, so it's fairly well trusted. It is the IMF directly, and you can go find the same information on their website. But really what they're saying is everyone's being very optimistic about this. The stock markets are going crazy. The last 2 weeks of going up makes absolutely no sense, except for there's cheap federal money and there's not enough money being purchased in bonds because the Fed's buying up bonds. So more and more people are betting that the stock market's going to go up. I don't see any way for this on the long term. Now, there are a few companies that are big that they're going to get bigger. This is not going to hurt long term. Amazon and Google and Microsoft, they're all going to continue to do fine because they're so big. However, in the short term, there's a lot of marketing dollars that just walked off. There is a huge decrease in marketing spend right now. So there's more people on Facebook than ever, which means they need more people curating content and dealing with the infrastructure, but they're making less money right now. So their expenses are up on the one hand, their revenue is going to be down. How long that persists, will the additional customers that came back and stayed busy now stay with them? Nobody knows. But there is going to be a lot of short-term pain in this market, and I have no idea why stocks have risen for the last 2 weeks. I don't think that's going to continue long-term, and I'm not the only one, because I read an article today that said short sellers' bets against the stock market falling are now at an all-time high, which means that a whole lot of people believe that there is a whole lot more pain to come. I think they're on the right end of this. I think the people who are overly optimistic are going to get burned. I see a lot of these in the groups who are of the stay the course, you can't time the market. While I believe that's true, there's a difference between timing the market and knowing when a catastrophe is at hand. And what most people don't want to realize, and you can go back and look at some of our older podcasts and episodes specifically around market cycles and debt, and we were due for a correction because of debt already. So because of that, you have COVID on top of a huge debt market. And that is not a good situation. And you're going to start seeing the bankruptcies mount up more and more. JCPenney's basically set up to go bankrupt this week. Neiman Marcus is going bankrupt. More and more clothing companies are going to go bankrupt. You'll see that fallout in malls. There's going to be a lot of small businesses that can't figure out how to make business work in a social distancing environment. It's going to be a problem for bars and restaurants. It's going to be a problem for all entertainment venues. When we're limited to 10 people, you can't exactly fill up a stadium with people. You just can't do it. There's no way to do social distancing well. So this is going to be with us for a while. And because of that, we need to start doing some planning around this. And I talked about this weeks ago in the first podcast that we did on COVID-19, in which was almost probably a month ago, and I said, look, this is just the beginning. And I truly believe that, and we're seeing that as the layers come out right now. So now that you have a better picture of your money situation, and over the next couple weeks that will solidify even more in terms of, we'll see if there's more PP money, we'll see if there's, people should start getting more unemployment money, so you at least know where you're at. So what I'm thinking is we need to start thinking about our planning. So for the unemployed, for the employed, if you still have a job, and I see a lot of the double-edged swords out here. It's, I have a job, it doesn't pay great, and I'm at a lot of risk because I'm a clerk at Walmart, or I'm a clerk at Costco, where people are still coming through on a constant basis. So I'm at high risk now, and I don't like that, but I'm still employed. For everybody still employed, I think most people who are still employed are counting their blessings. And for you, if you still have a job and you're still making money and you're starting to save any or see that, there's going to be opportunities. Whether you need to replace a car, cars are about to get really cheap, especially used cars. New cars are going to get cheaper. The deals will get better because there's not going to be nearly as many customers buying. So the supply-demand curve is going to shift. That's going to be true with a lot of assets. There's going to be a lot of movement from this that is going to play out over the next couple of years. And depending on how long we're with this virus, there'll be different opportunities. So count your blessings if you're still employed. If you're unemployed, you got 4 months of that extra $600 a week coming, and your benefits go to 39 weeks. So based off of your living situation, your lease situation, now you can see what your money revenue situation is going to look like. Now you start needing to thinking about, okay, even if I stay on unemployment longer term, what does that look like? And they might extend, if this thing keeps going, they'll extend the 39 weeks out, and it may end up like it was back in 2009 where it's 2 years, but it won't be with all the extra money. And for people who have debt along with the lower revenue, where now all of a sudden you can't pay all of your bills, you're going to have a different circumstance to think about. And, well, am I moving in with more roommates? Or if I own a home, am I having people move in with me so I can try and pay rent and reduce my expenses? At the same time, for people in different situations, bankruptcy could be a good option right now. So we got a lot of people in a lot of different situations. We're going to try and walk through those. The other thing that I want to get into is the part that we never do, that we all hate doing, which is our death planning, our wills and estates, and making sure they're there. And a lot more people, if you've got kids, you need to do estate planning if you have any assets, so that you can make sure your money gets to your children. And when we get into those episodes, I'll explain it in detail more of the scenarios. But basically, if you're married right now and you have, let's just say you have one child, and you're worth $500,000, let's just say. When you die, what you think is going to happen is that your money will go to your wife, and then when she dies, it'll all go to your children. And in theory, that sounds right, and that's what everyone thinks is going to happen. But let me just present the easy analysis. And the reason that I say most of the men are going to die first is because that's normally what happens. So yeah, it's sexist against men, but we die sooner. That's what happens. So let's say the husband dies, the wife gets all of the assets. The wife remarries. Those assets were never put in a trust specifically for your child. The wife remarries, she dies before the new husband dies. All of the marital assets, if there's nothing set up, go to that husband. Now suppose he's got other kids of his own from a different relationship. When he dies, where do you think the money's going? It's not going to your kid, it's going to his. And it happens just that fast, and this happens all the time. So more of us need estate planning than we know or want to admit. And all of us put it off, myself included. So this week, my wife and I are going to go through it. And over the next couple coming weeks, I'm going to present that to you of what you need to think about. And depending on where you're at with assets and your family, in how you want to leave it and how you want to set it up. But a lot of people will need to set up trusts so that they can ensure that their money goes to their children. And obviously, this is a pretty good time to do it. A, because we're all stuck at home, and B, because at any time, any of us could catch COVID-19 and die. Unfortunately, that's happening on a pretty big scale here. Additional layoffs are probably coming, so know that. So as part of the plan, advertising just went off a cliff. People want to move around, but everyone's going to be scared. We all want out of our houses right now. We all want to be able to go do some interaction. We're all stifled and feel, obviously there's protests going on this weekend over keeping things closed. But that's the right response so that we don't let this thing get really out of control. We have no solidified good treatments yet. The president keeps spouting off about nonsense that he has no clue about. He's not a scientist, and nor does he know. The only thing he knows is how to be a good media personality. That's obviously where he made his money. He didn't make it because he was a genius real estate person. He didn't do that at all. He made most of his money through a tax loophole and his ability to get a lot of tax write-offs from bonds that went south that other people took the bath on, but he got the tax write-offs for. So he's not very good at synthesizing this information, and we need to listen to scientists. So when the scientists tell us that it's safe to go around, then we should. But until then, people are going to be scared to do it. Now, some people won't. Some people are, hey, if the deal is I need to catch this, sign me up. But as we've seen, it doesn't even matter what age you are. You could die. So we're going to have masks around for a while. We're going to have more companies declaring bankruptcy because they can't figure out how to live and deal in a mask environment. And the world is certainly going into a recession. So when we think about the United States, typically when they say when we have a sneeze or a cough, the rest of the world catches a cold. Well, right now we're sick. That means the rest of the world is going to be sicker. As COVID goes through second and third world countries, I think we're going to see some devastating effects. But economically, across the board, we're in a massive recession. I mean, oil is trading in Texas for $10 a barrel. That's crazy. All of our storage for oil is about to be filled. So there's literally nowhere else to put it, which is really wild. Never happened in our lifetime. So we're seeing things we've never happened. And yet everyone seems assured that, we're going to have a V-shaped, we're coming out of this quickly, the economy is going to take off like a rocket again. I don't see that happening. I see it being very long and very slow, drawn out. So when we talk about an individual plan for you, you got to be realistic about your situations. I have friends across the board in this scenario, some moving back in their parents. And these are not young friends, but they're friends who just lost their jobs, and this is the best decision for them because they don't know when those jobs are coming back. We don't know when we're going to be, how many flights are there going to be every day? How long before those flights are full? Until we have some certainty about a treatment or a vaccine, it's going to take a while before all those airline jobs come back. It's going to take a while before all of the hospitality jobs around travel come back. It's going to be a long time before Las Vegas has enough people in it to fill up a lot of casinos and to have them all open. It's going to take a while before the airplanes are full again. It's going to take a while. So, while we may not like the decision of moving back in with our parents or moving back in with more roommates, it may be the right decision. For many people, if you're unemployed right now, and most people know this, but the problem is we've got a whole lot of extra debt sitting on all of our laps right now. Whether that's credit card debt, whether we owe more on our car than it's worth, between the credit card payment, the car payment, and the house payment, and paying for food and health care, we just don't have enough money. And now if we're on unemployment, there's even less. So we're going to have some hard decisions about how do we reduce that. That means that a lot of cars are going to be sold or repossessed one way or the other. That means that people are going to be spending a lot less on entertainment, even though there's going to be less entertainment they could even purchase to begin with, but less money in general going to support all of these other jobs in the economy that are not essential. We've kind of seen what's essential and what's not based off of who's still working and who's not. So we're going to have reduced spending. Bankruptcy is actually going to be a very good option for a lot of people. For some people, this may be a very good opportunity. If you've got put on unemployment, and especially if you think long-term your job will come back. If you work, let's say you work at a casino and you're a craps dealer. You probably make decent money based off of tips and wages and everything else because you work for a union. So that's a good thing. You think long-term, in a year from now I'll have my job back. And in the meantime, I'm going to be on unemployment. But I have a lot of debt. I have a bunch of credit card debt. I'm underwater on my car. I don't own a home right now. So maybe the best option for me today is move out of my apartment and or stop paying rent on it. Find some people to move in with later where I can pay cheap rent or cheaper rent. Get rid of a car now to buy another one later. And save everything else I can and set up for bankruptcy. And then in bankruptcy, while on unemployment, odds are, now you don't make any money, they're going to wipe away all that debt back to zero. So I'm going to do a few episodes on bankruptcy and what that process looks like and what you have to go through and how the game is played. Because make no mistake, bankruptcy is a game. And a lot of people don't want to play in that game over guilt. And if you're one of those people who doesn't want to play in bankruptcy because of guilt, my main message is that if this is what's best for you and your family, then get over the guilt, because this is just the way the system's set up. The system is also set up to trap us into debt traps, where they continue to extend you more and more credit right up to the point where all of your money that you make goes to paying your credit card bills, and you barely have enough to live on. So there is the other side of the game with unlimited advertising that sets us up to, be keeping up with the Joneses and create more debt. They allow people to get in way over their head on their cars by giving them loans worth more than the value of a car. And giving somebody a loan worth more than the value of a car when you're driving it off a car lot and it's immediately going to depreciate further and be worth even less than the loan that you just signed, which is already more than the value of the car when it was on a lot. So it's a double whammy. And the fact that they allow that to happen means that people end up trapped in debt. And the debt can become a trap very quickly. So if you can acknowledge that there's a debt trap, and if you got trapped in it, then take the safety net and the way out, which is what the bankruptcy system is. And don't feel guilty about it. Just understand that it's part of the process, and now could be a very good opportunity to take advantage of that process. And in fact, the few law firms that are hiring right now are the bankruptcy law firms. They expect this to go up. We're going to have a bunch of small business owners that are going to file bankruptcy to protect their personal assets. You're going to see all of a sudden the number of bankruptcies start really going up. And that's going to be across the board. That's going to be corporate bankruptcies, individual bankruptcies, all sorts of them. And what a lot of bankruptcy ends up being is just, hey, we need to settle the debt and get rid of this, which gives a lot of people at least a blank slate to go forward with. Which, if I have my options, I'd rather have a blank slate to come out of this recession, depression with, than still have that debt hole to come out of. So we're going to walk people through some of the bankruptcy stuff. We're going to talk about it in detail of what you can do and what you can't do, and how to strategize that so it's the best possible outcome for you when you come out of it. So I hope you guys tune in for those. Please pass this along to anyone that you know that needs some financial help, as I know that almost everybody in our world right now is a little bit concerned, and they should be, and we all need to be developing some plans going forward. So like us on Facebook, like us on YouTube, subscribe to our channels. Please pass this along to your friends to get more of the message out there. This is all pro bono work from me and my wife that we do to try and help give back so that people have a little more information on the financial situation, and so that everyone can keep a few more dollars in their pocket. Because while right now the federal government's handing it out, you best take what you can get right now, because it's going to be a brand new world that we get to live in the future, and none of us know how that's going to work out. So thanks for listening. Catch you next time.